Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show where we take your stock-specific queries and get it answered by live top stock market guests who join us on the show as well. So how can you participate in this show? Well, you can send us all your questions related to some stocks in your portfolio, or if you want to buy some stocks afresh, by writing to us on this WhatsApp number that's flashing on your screens. Don't forget to mention your own name, your location along with the question and your contact number as well. So we can call you up on the live show and take your question as well. Alternatively, you can also use the social media platform. You can send your queries in the comment section on the YouTube channel where you're watching this show on. And in case you've joined us from social media platforms like Facebook, Twitter, Instagram, even at those platforms, you can send us your queries and we will incorporate all of them in this show as well. But before we take up all of your queries and before you send them to us, let me tell you the top headlines we're tracking for you at noon. Markets begin a new series on a cautious note. Nifty hovers about 22,500. Tech Mahindra, LTI, Mindtree lead the gains today. Financial services, however, under pressure. Q4 earnings season is in full swing with Maruti Suzuki, Tata Technologies, Shriram Finance and Bajaj Finserv all set to report their earnings today. IT company Tech Mahindra surges 10% despite lackluster financial results, and that's because the company now aims for ambitious objectives for the next 3 years. The phase 2 of polling on Lok Sabha elections, voting has picked up pace as 12 states and 1 union territory go to polls today on 88 seats. Karnataka, Chhattisgarh, Kerala, MP and as well as Rajasthan have seen brisk voting until noon. Good afternoon to all our viewers, and now to welcome our guest on the show. Today's stock market expert to answer your queries is Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Of course, on the first time you're joining us on Daily Calls, but we'll start off with your own view as far as the markets are concerned. How are you looking at the current setup? Is it a good time to be invested in the Indian markets, and what should be the key things that investors today investing in the market should remember?
Yeah, good afternoon, Sakshi. Thanks for inviting me for the show. See, any time is a good time to be invested into the market. It depends upon what kind of investments you are looking for and what are the pockets of areas where you see a trajectory growth coming into play over, say, next 2, 3, 5 years kind of a perspective. As long as that long-term horizon is intact, there is no need to fear, but cycles can come and go. But as far as trading is concerned, it's always a difficult market to be in. Any market is a difficult market for trading perspective. I do think this is a right time to be invested into the market. The earnings flow has just started. So sectors have been on a mixed bag. I mean, IT was a disappointment largely. As far as financials are concerned, they are a mixed bag to a great extent. I expect automobile, power companies, railway infra, defense companies, and other construction related companies, material suppliers to do very well going forward into the earnings season. And sectors, I think the type of rallies which we have seen in the market for last 2, 3 days, it does suggest that pre-budget rally has already started. So if you are positioning yourself as a trader and investor into the companies which are likely to benefit after the election when the budget rolls out from that outcome, then that positioning is likely to be right. And there, I think three sectors stand out. One is the power play. The power sector is likely to do well. The second is railway infra. Third is the defense sector. So if you are invested in these three sectors, I don't see any worry coming out there. In case, in fact, any volatility which is there in the market should be utilized to buy. And fourth, a cyclical play which is now doing very good is the metal space. So these are the 4 areas where I think sizable investments can even be made at current market levels. Though the market at current levels is a bit volatile, and rightly so, because when in an earnings season where you are discounting high valuations, a slight miss in earnings here and there will lead to some profit taking by the traders. So that is the nature of the market. Expect a range bound volatility in the market on the headline index. sectorally, I mean, the four sectors which I said is likely to do well going forward for next 3 months.
All right, so that's the view coming in. Good time to stay invested, especially 3-4 themes is what has been listed by Mr. Dharmesh. So over here, power, defense, railways, infrastructure space as well as metals. These are the spaces that you should look for value and for specific stocks in these ideas. And now to begin with our discussion and taking up our viewers' questions as well. A lot of people, Dharmesh ji, have also started to write into us on our YouTube channel. So Satyanarayan Rao has said, good morning to you. KD Pradhan is asking, hi Sakshi, how are you? I'm well. How are you, Mr. Pradhan? Sanjay P. Mittal also along with it. Suyash has also written in. We'll be taking all your queries, so stand by for all of those queries. But the first caller we have is from Kolkata. Abigail Nyogi has called in. Hi Abigail, how are you? This is the second time you're calling on the show. How are you? Okay, I think the phone line has got disconnected. We'll try and reconnect back to Abigail. But let's take the first query, and this is from Mr. Sanjay P. Mittal. And he wants to know on Imagika for next 6 months. In case you can give a view, sir. If you track Imagika World Entertainment, the stock currently is hovering at around 83.75. Last 6 months, we've actually seen a move of about 82%. And over the next 6 months is what the question has come in on from Sanjay P. Mittal. How would you really address that query, sir?
I think actually most of the news flow has already been discounted because the healthy season or the good season for Imagika is over. It starts from the month of September onwards and last till February. So but now we are running into summer season, so the footfalls and the revenue billing is slightly lower in this season because it's a very heated kind of a environment. Climatic conditions are so harsh. So I think it will go into a restive kind of phase, and then I mean, the monsoon season hits in. So next 6 months would be likely to be a more of a consolidation kind of a phase. So if a person has invested from a trading perspective, I think I don't know the levels at which the position was taken, but the stock price has done really well. So some profits can be taken from the table and wait for a correction or a dip to come into play for re-entering into the position.
Okay, I hope that answers your question, Sanjay ji. In case you're holding on, then try to take some profits off the table and look for dips to re-enter. And of course, the tourism theme and the summer season could be playing well for the upcoming months as far as the company is concerned as well. We do have Abigail back on the phone line with us. Abigail, good afternoon. How are you? Tell us your question for today.
Yeah, I just bought Dr. Lpath Labs 40 shares for 3394 in 2020 during COVID. And I'm making a loss ever since. And today I think it's about 2390. What should I do?
Okay, that's a valid question right there. When we talk about the kind of move that we've seen, 40 shares in Dr. Lpath Labs and a loss right now because the stock has slipped to about 2394, and Abigail's buying price was somewhere at 3394, sir. Of course, this was invested during COVID. That time everybody was going for diagnosis and there was a huge demand for it, and therefore this entire theme was running very, very sharply. But after all these years, we've actually seen the pharma and the diagnostic space not really perform. There are some pickups happening. We are seeing stocks like Divis Laboratory really doing well. What would be a better strategy over here? Hold on, because Dr. Lpath is a marquee name in this business right now. But is there something that's not working for the company?
Actually, I mean, the problem is if you are entering into a position in an aberration period. So that aberration period, when it is going to last and how long it's going to last, is not known. And COVID was one kind of a period where things are quite fluid and uncertain. And that time, these diagnostic centers were much in demand because of the problems which was there in the society at that point of time. And there were some profits also being there made in that period. So because of that, the valuations went, I mean, or it went quite up the hill. And I think after this stable environment which has set in, the back to normal growth rate is what these companies are witnessing. They are in a growth phase, but the valuation mismatch has already been happened. So I don't think it's a I mean, multi-bagger kind of a thing from here on, because competition in the space is anyways heating up. If you look at Tata and all, the type of offerings they are having, this will be a bigger challenge for erstwhile companies. I mean, not erstwhile, but the pre-Tata and all entry companies like Dr. Lpath Labs. So, diagnostic space will be in a spot because of higher competition and lower realization. So that's our problem. What I suggest is, if she wants, I mean, the person wants to be into a diagnostic center, then take a hit there, cut your losses out here, and maybe switch to a better option in a hospital space. And that is, I think, Apollo Hospital stands a much better chance.
Okay.
Because they, the triggers are firing. The hospital as a business is doing well, but their digital platform, that is the healthcare segment where they are offering both the online consultancy as well as the pharmacy division, is doing fairly well. It's about to break even, and it's going to likely to add around 30 to 40% to the operating profits, which are huge compared to, as of now, it's not so significant. So a switch is what I would recommend here.
Okay, bite the bullet at this point in time, Abigail. You may be making losses here, but to sit and to wait for a turnaround may actually take you a long time. Rather, switch your positions, shift to a better stock over here. Apollo Hospitals has been recommended to you, where you can stand a better chance to make profits in the interim and also cover the losses that you made right now as far as Dr. Lpath Labs is concerned. That's the advice from our guest, but please do also concern in case you also have a fundamental expert at your end or a financial expert to tell you that as well. Let's go across to our next caller. Now, Mr. Ashok Rampali is with us. Ashok ji, namaskar. कैसे हैं आप? कहाँ से बोल रहे हैं?
Good morning. I'm speaking from Hyderabad.
Hyderabad. Hi, sir. How are you?
I am very fine, madam.
Tell me, which is your stock that you're holding? Do you have a question on a stock that you're already holding, or you want to buy a fresh?
I want to ask a question regarding buying of a share. This is regarding J&K India Limited. Yesterday,
IPO closed
May I have
yesterday,
a-
yes. Did you apply for the IPO?
no, that is the mistake I have done yesterday in J&K. Because
Yes. Please go on. Ashok ji, बोलिए.
yeah, this J&K started with very first day hardly it had any subscription. Second day there was yeah.
Right. So, Ashok ji, it will be better if you mute the, television channel or the YouTube platform where you are watching this platform. So, you mute it, you can go back to it and listen again. You right now speak to me over the phone line. That will be a better way.
Yeah,
Has a question on J&K IPO, which closed for subscription yesterday. In the upcoming days, it will be listed as well. How would you really advise on this one? I'm not able to get whether he really is subscribed to this IPO yet or not. But in case he is not subscribed, what would be your view once the company gets listed?
Yes, actually, we did release a note on J&K IPO, and I think 20-25% kind of conservative listing gains is what we are expecting post the listing happens. So, but there, I mean, long-term view, if somebody is having for say 2 years or 3 years, it's a very good space to be in, and it's a niche space where they are providing equipment to transformers, rectifiers, heat exchangers, and all. So those equipments will be needed going forward. So capital goods segment is anyways, it's the upcoming segment for the next 2-3 years. So that is where the action is likely to rest. The company has been doing well. If you look at the numbers historically, they have been improving quite significantly. And going forward, I think 20-25% kind of a CAGR is expected on the top and bottom line. So for 2 or 3 years holding, one can wait. We would like to have a look at further quarterly earnings before coming out with a complete note. But as far as listing is concerned, I think 20-25% kind of a listing gain, if it is there on the table and somebody is playing out for that, they should book out. Now, the next question would be, if the person has not been able to subscribe and wants to buy on the listing day. So anything above 25% kind of closing happens on the listing day, then I would suggest to wait. Wait for a decline to come through and then buy it. Otherwise, if it is less than that, I mean 10 or 15% kind of an opening is there, and then it's a good time to enter the stock if you have missed the subscription bus.
Okay, got that. I hope that answers your question, Ashok ji. Do try calling in again in case your query is not addressed thus far as well. Let's go across to our queries now, which are coming on our YouTube platform also, Dharmesh ji. Here, KD Pradhan, who is a regular viewer, has sent a new query for today, and he's also sent an appreciation for our guest who came in yesterday. He's very satisfied with the advice given by Mr. Rajesh Agarwal on Kalyan Jewelers. Thank you. We will pass on this feedback to our guest. Today, Dharmesh ji is there to address your query. Mr. Pradhan wants to know from you, sir, is it a good time to invest in Tata Power at the current levels, looking at the power boom?
It depends, Sakshi. What is the time horizon you're looking forward to? If you're looking to say 2 years kind of a time frame, then maybe maximum journey is through 80-85% of the price appreciation is already built in. So now you're left with only 10-15% kind of an upside here from 2 years kind of a perspective from any entire power sector, which includes Tata Power as well. But if you are looking at say 6 year, 7 year kind of a time horizon, then the entire power generation capacity of India is going to go up by around 75 to 80%. And so would be the case with most of these power generating companies. So Tata Power being included in there, JSW Energy is there, NTPC is there, everybody is adding on to capacity, and the median capacity addition is around 50 to 60% for all these companies. So if your time horizon is more than 5 years, stay invested in Tata Power. If you want to take up a fresh position, you can do so. There's no problem as to this sector. And because most of these companies who are investing into power generation capacities are more to do with renewable. They are not investing into thermal. Only NTPC would be coming out with thermal capacity expansion. Majorly, it would be renewable wind or solar. So that's the niche area, and they are more competitive. As far as price appreciation is concerned, I think if you are investing for 5 years, they all are doublers from here.
All right, got that. I hope that answers your question also, Mr. Pradhan. Please do write in and do tell us your feedback as well. We'll go across to the next question. This is by Satyanarayan Rao Kulkarni, and he wants to know from you on Tata Technologies. At the current market price for 1 year period, is it a good bet? Of course, Tata Technologies will be also upcoming with the earnings this time around, so we'll keep a keen eye out on that. It did perform stupendously right after listing and of course during the IPO. Lied low for some time, but if 1 year perspective if somebody has, how would you advise on Tata Technologies, sir?
Sakshi, I mean, from 1 year's perspective, it's a very short horizon. It's more of a trading kind of a play. And if you look at the valuation of Tata Technology, it's priced to perfection from 1 year perspective. But if you're looking forward to what Tata Technology has to offer over a period of time, so there are multiple triggers out there. I mean, they have recently tied up with BMW as well. And EV is a space where they have been working very fine, and they have given their proof of concept, and the execution and the product platform concept has already been proven by them through their foray into their home production of Jaguars. So it's a proven company, proven technology is there. They have been doing very well, and they have been doing very well in EV space, which are high margin accretive. But I don't think from valuation perspective, given a year's time frame, more upside is there. Maybe 5-7% up and down can happen, but beyond that, I don't see the traction coming. Major traction will come towards the later half of CY25 when BMW things starts rolling out revenues from them and other tie-ups are there. So it's a long-term haul for Tata Technologies for an investor.
Okay. A lot of other viewers are also writing into us. Sandeep, Pancharya, Swati, they've all joined in. Suyash has joined in. These are all our regular viewers from last 1 week. They've been coming time and again to ask their queries as well. So one by one, I will take their queries also, Dharmeshji, with you. Swati has asked today as far as, her question is, this is on Indian Overseas Bank. At the rate of 67 is the purchase, and she can hold for the next 5 to 6 months. She wants to know what should her, target price maybe is, and if you could give us a guidance over the next 6 months, how do you expect Indian Overseas Bank to perform, sir?
Sakshi, I think it's time to stick to the larger players into the same basket. I mean, financials will see a consolidation of business happening. The honeymoon period is over for the entire financial space when mid, small, and everybody was participating into the good trajectory. And as the norms by RBI become more stringent and they are more careful towards the lending, to whom they are lending, that is also being checked very thoroughly. So I think smaller and marginal players will face difficulty in getting new businesses in place. So major growth will come with established players. So I mean, sticking to the PSU basket, I think the better option would be to take a bet into the Canara Bank or a Bank of Baroda. SBI has already moved, but still SBI looks attractive, and maybe a PNB. So these are the four banks. If you want to stay invested, please switch it to these banks in the same space.
All right. I hope that answers your question, Swati. The next question has come in from Mr. Sandeep Pancharia. He wants to know, as far as Vedanta is concerned, what would be the best entry level for the long-term perspective, and what is your view on Vedanta, sir?
Actually, I think most of the stock price run-up is already through on Vedanta. I mean, we were recommending when people were negative on Vedanta at around 215, 20 levels, 240, 250. There were certain reports during the round where their debt restructuring was getting into trouble. From there, the stock price has run up quite hard. And I think now it's in the last leg of its journey, given the fact that commodity upcycle has started internationally. I mean, US is doing well, Germany is into expansion mode, China is now picking up from the bottom. So these activities are likely to continue, and our country itself has been doing fairly well. But as far as valuation is concerned, and given that size of debt they are sitting on, and they will need restructuring, refinancing, and interest rates are not going to come down very soon. So that hardship is likely to be there on the balance sheet and P&L. So maximum what I see from here is maybe 10% more kind of an up move. So if you've been holding, you can stay invested, keep a strict stop loss, maybe say 375, 380 should be your stop loss for this position. And you can book out at around 440, 450. So that is what I am seeing in Vedanta as of now.
Okay, Sandeep ji, 440 and around is when you have to keep a target price, and then you can book out some profits, and the stop losses have also been shared with you as far as Vedanta is concerned. The next viewer is Samir Vara. Hi, he says, hi, this is Samir from New Delhi. Hi Samir, how are you doing? His question is, one railway stock or defense stock? He's asking you. Since you actually talked about these two spaces, I think that's where the question has come in from, where he can get double-digit growth in the next 6 months. He wants to invest 1 lakh rupees. One stock either from defense or from railways. This is going to be a tough one to select. Well, how will you be advising him, sir?
Yeah, I mean, just one railway stock, and for next 6 months, I think RVNL stands the bill. That fits the bill because that company is consistently getting from the
Yeah.
government and the railway ministry, and things are shaping up well. Valuation wise, it does look a bit stretched, but that is how things are for a growth sector kind of a perspective. So that is one stock from the railway infra space. From defense, I will still go with Hindustan Aeronautics, just because marginally it is still relatively cheaper to BEL, like to like comparison if you want to do on the valuation metrics, not on the kind of work they do. At the same time, the auto inflows has been very strong for HAL, and see the type, the business in which it is into LCA, MCA, and all light combat aircraft, helicopters. The more you execute, the more better orders you get. That is the nature of this business, and this trajectory has started for HAL. So 6 months where it will go, I am not very clear on that. But if I want to buy one defense stock, it would be HAL and not the shipbuilders and all. Why I'm saying so? Because next 5 years, if you are holding it, I still see it a doubler from the current levels with good dividend yield and a margin of safety in place.
Okay, see, you got bonus over here, one railway and one defense stock. You had asked for just one. We've given you 2 stocks right here. The Rameshji believes from the railway space, RVNL fits the bill of what you are expecting and probably can actually give you better returns if you hold on for longer term. And HAL would be a doubler over the next few years. So think about it and look at that perspective as well, and then invest from the defense space as well, Samir. The next 2 questions are from Shivam. and also from Suyash. These are the two questions I'm going to take from YouTube again. Shibam wants to know on IRFC, sir, since you're talking about railways, what could be the next 6 months target for this one?
See, in railway, I am more constructive on the execution platform or the companies who are doing the railway infra projects rather than the financing companies. So IRFC, if you look at the financials and the fundamentals and the type of valuation it is enjoying, it's already done most of the run-up. So now it's in the superheated zone. What I expect from IRFC is more of a time-wise consolidation rather than a stock price run-up. So there's nothing wrong with the company. The business will keep on flowing in. The run rate at which it is going, it will keep on going. Its book size will grow because eventually the funding to this railway infra companies is to be routed through IRFC. That is how the entire structure is designed. But valuation-wise, it looks into a highest zone of the valuation multiple. So there, I don't see much price appreciation coming into play.
Okay. Well, it's now time to shift gears from the viewers' questions. A lot of queries have been answered today. We will take all the other queries on Monday when we come next, because today is a Friday. All of our viewers know that we also discuss one company in greater detail for better understanding under the KYC segment of our show, which is the Know Your Company segment. And today we are going to be discussing about Tejas Networks. Now, everybody knows who follows the stock markets very, very closely and has been watching our daily shows market today, that this week we did see a sharp momentum on Tejas Networks, and this was after the company reported its earnings as well. Over the last 5 days, we've actually seen a 30% return on Tejas Networks, and we have also managed to see two back-to-back days when substantial double-digit moves were seen after the earnings. Tejas Networks, for all the wider audience, it's a Tata Group company which is into making into telecom equipments, 4G, 5G, wireless, optical and satellite network equipments as well. So it works in the telecom space, and we do know last few days the entire telecom theme has also been buzzing, with Vodafone FPO sailing through. Bharti Airtel has been constantly buzzing as well. Indus Towers has been buzzing, HFCL. So the entire theme has been in full of action. So to understand a little bit more on Tejas Networks, the company was established in the year 2000. It provides enterprise Ethernet services as well. We do know that the company manufactures and sells the optical data network. Some more details will flash in on your screens. Now, the company declared its Q4 results on 22nd of April. The top line increased 343% and the profits also came in sharply higher at 146 odd crore rupees. It's noteworthy that Tejas Networks had declared a loss of 19.96 crores in the previous fiscal year, same period. So it's come into profits, and that to a substantial move is what we have seen. And as compared to the previous quarter, we've actually seen the revenues also grow pretty sharply as well. So Dharmeshji, first to you on Tejas Networks, prima facie, how does the company really look? Recently, we've seen the earnings as well. What were your own insights as far as the earnings came about? The stock reaction was pretty positive, but does it hold promise for a sustainable fundamental performance going forward from here?
Yeah, definitely. As far as business is concerned, it does hold promise for sustainable fundamental performance going forward. Because if you look at the order book was very big. I mean, 8,000 odd crores of order book is a healthy sign. And the company is doing one fourth of the size. So book to bill ratio stands at 4x. And the order inflows would be there because as the shift from 4G to 5G happens, the order inflow would be far higher. And the company has been getting substantial order from Government of India as well. So business-wise, fundamentally, I don't see a challenge out there. The challenge has been the margin for this business because most of the optical fiber-related and optical-related businesses has to go through the margin pressure of the commodity pricing. So it's more of a commodity kind of a company. A near comparison would be like Sterlite Optical and all. So there I do see the fluctuation in the margins coming to the play. But as far as the business is concerned, it's likely to grow. Now coming to the valuation part, it's as of now, because last 5 quarters were very bad, the valuation looks very expensive. It's more than 200 times kind of a PE multiple. But going forward, as they execute the orders and the efficiency comes into the play, I do think earnings will improve. But one has to be a patient with this company. You have to give it time for more than 6 months to 1 year to see how the entire business is going to pan out and what incremental business and the type of margin accretive equipment business orders they are going to get. That will determine the real value and the further future price traction of the company. So business traction, I am very confident about. There is no problem out there. But as far as the stock price has moved up sharply, and being a small cap company, usually small buying also leads to a high price action. So there, the comfort is not there as of now. Maybe 6 months or 1 year time frame that may come, and I'm hopeful about that. So we are having this company under radar. We are, closely watching it and doing a research work on that. You have to release a note on that. So for that, we would like to wait for one more quarter to see how things are panning out. As of now, the things look very constructive for the company.
Okay, let me also reiterate for our viewers what the management has really said as far as the earnings go, and after that on the outlook per se. Arnob Roy, who's the COO and the executive director at Tejas Networks, has said that they've seen a good pipeline of business opportunities coming in the coming year. In India, of course, there are a lot of 5G upgrade opportunities as well as expansion, the investments in terms of broadband, in terms of upgrading the backbone capacity of private operators as they expand their broadband services for the 5G networks. Those are all great opportunities for us in India. So that's the statement that came in from the management. After the results, we've also seen brokerage houses pick up the kind of move that we are seeing in the stock. They've also talked about higher targets as far as price targets are concerned, and a vision as far as the EPS estimates are also concerned. So MK Global Financial came in with a report on Tejas Networks. They recommended a buy rating on the stock with a target price of 1100. Currently it's hovering around 1027. So about a 20% uptick is what they expect on the stock going forward from here. They also see that the revenues going forward for FY25 estimated could be 4 times the FY24 revenues on both BSNL as well as BharatNet execution. They've also increased the revenue by 6 to 7% for both FY25 estimated and FY26 estimated earnings on account of the beat in the previous revenue estimate that just have come out in the Q4 results. They've also raised the EBITDA margin estimates by 150 to about 160 basis points on the margin beat as well going forward from here. So that's another vote of confidence coming out as far as the brokerage firm is concerned. Dharmesh ji, is Tejas Networks, what would be the best way to approach this stock? Should one start a SIP on this company, or do you think there are better players in this segment that one should be approaching in case one really needs to play the telecom theme here?
See, telecom, I mean, Tejas Network is totally a different telecom theme play rather than, GSM or service operator. So it's a product company. It gives the equipment to the telecom vendors, I mean, who are into the service segment. So let's not mix it. I think SIP would be a right way to approach Tejas Network because it's heated up. Give it some time for the prices to settle down. So from around 1,000 levels to 750. So that's the maximum downside I see in case of any market related eventuality of a good correction happening into the play. And upside can be, anything. So let's wait for 1 or 2 more quarters because see, this 150 basis point or 200 basis point kind of a margin improvement or 6-7% kind of a top line growth does not augur well with the kind of stock price. I mean, appreciation you have seen or where it is sitting as of now. If you look at ROEs and ROCEs of this company, so that's very depressed as of now, which will definitely improve. But to support the kind of stock price it is sitting on, you need at least 30 to 35% kind of a yearly profitability CAGR with 15% kind of an ROE. So that I think is 2 years away from where the company is sitting on the fundamentals as of now. So, but it's a story in making. It's a good business into making, and the opportunities, as you said, CEO and CFO all have pointed out. That's a very valid opportunity out there. And this company, being a Tata Group company, enjoys the benefit of capitalizing on same. So no doubts out there, but give it a time. That is what I say, and SIP is the right way to approach it.
Okay, got that. Thank you so much, Dharmesh ji, for being with us on this very special edition and addressing all the queries that viewers asked you, as well as giving us deeper insight into Tejas Networks, the KYC company that we were keeping in focus, as well as an overview on the telecom space that you've shared with us. Truly a pleasure to have you always on Business Today Television, and for the first time on daily calls as well. And we hope that you can continue to come and give us your views of more frequently to our viewers as well. Many thanks for being with us.
Thanks, Sakshi. Thank you.
All right, viewers, time to wrap up this edition of Daily Calls. Well, we've been able to address about 50 to 60 queries as far as this entire week is concerned. And on an average, we've addressed about 10 queries, 12 queries a day. In case you too have a stock related query and you do not know what should you be really doing on an existing stock, maybe if you are sitting on losses or you want to buy afresh, whether a stock will suit your portfolio or not, well, instead of addressing those questions on to your friends who may be doing some trading or investing, directed to experts who have the knowledge, who track the sector very closely, who can give you a better advice. And therefore, we've started this show called Daily Calls for you. Send us your queries on the WhatsApp number flashing on your screens. You can write into us by sending your name, location, your question and your contact details. Many thanks for viewing this edition.